So today I'm going to follow on from yesterday's video about some important things you need to know about going into the stock market in 2023. So this is a bit more of an education video and a bit more of a video talking about like macro environments as well. These videos just seem to be really popular at the moment. Actual stock analysts like videos are just not really picking up the views at the moment. So it seems like you guys really do like these sort of videos. So I will try and base the videos around this kind of content a little bit more than what I have been doing. And then if you're a little bit more interested in like deep dives into stocks, I might leave that a little bit more for the Patreon when we do the stock request on there. So I thought I'd just make you aware of that, because what I'm seeing at the moment on the YouTube channel is that the pattern for like education videos and macro videos are just a lot more well received. So yeah, I thought this one was actually a really good one to follow on with yesterday's video, and some important things you need to know, because going into 2023, I think we're set for a mega year in the stock market. And a few of those points I made in yesterday's video, so if you want a bit more of a deep dive, that's probably the best place to go. But basically going into 2023, I believe first of all, you got valuations, which we'll be talking about in a second. Valuations at very good levels for a lot of stocks, especially the small and mid caps in particular. And then going into 2023, we do have obviously some recession fears, a mini recession fears going on, but obviously we're kind of really in that. It's not something that we'll be entering in 2023 because we're currently in it. And going into 2023, I believe one of the major issues that we've had in the world, which is inflation. Inflation will go down next year with the hard comps, and plus with the mini recession that we have going on, obviously that's going to leave oil to go down. And if oil goes down, what is the one major driver of inflation? It's oil. If oil goes up, normally you have inflation, skyrocket, which we've had. Basically oil going up puts everything up. It's one of the main contributors to inflation or prices rising. Same as if oil goes down, it brings inflation down. It normally brings the price of everything down. And a recession, because there's less demand on oil, that's why the price drops. So we've got the perfect combination in here where we go into 2023 with inflation coming down, oil coming down, more profit for businesses, and obviously businesses at really good valuations. So going into 2023, to make some really good money, this is the key thing to be looking at when you're investing into the stock market. First of all, valuations and metrics. At the moment, there's so many opportunities of stocks at very good valuations and very good metrics. Now, one of the big mistakes that you don't want to be making, and to be fair, sometimes I actually make this mistake in some of my videos, is that I always talk about the share prices and I'll say, oh, so-and-so stock's down 50% and I'm interested in that stock, when that is true that it's down 50%, but the reason why it's down 50% and also because valuations and metrics are cheap is why I'm interested in it, not just because the share price is down. In 2022, going into 2023, you'll see that so many stocks have been killed on the share price. There's so many stocks down, over 50%. Now, some of them stocks are fantastic opportunities, because when the stock market drags down, everything basically drags down, and there's some really good opportunities. However, there's some stocks down in the stock market that deserve to be down. There's some stocks that are just got really hyped up in 2020, 2021, gone to really extreme valuations, and maybe at not amazing valuations. Prime example is Adobe. I love Adobe, but even until this week, even when it had a 20% drop, I was still looking at that stock going, it's not cheap. Like it's 100% a lot better than where it was. But even when it was still at like $400 and it had already dropped from $600, I was like, it's not an amazing opportunity. It's a great business. I don't know if it's an amazing opportunity. And some stocks are having that, the catch up, because they deserve to have the catch up. However, looking for the ones that have probably sold off too much is really the key. Trying to buy an asset that's been massively sold off is the key. And rather than just looking at the share price can be a good indication of, oh, it's down 50%. Let me just look if that's a good opportunity. Look at the valuations, look at the metrics. One website that I massively use for this is Ticker. And if you go on Ticker, you'll be able to see the metrics on the business. So that'll be something like the EV to EBITDA or to revenue. There's a ton of metrics on there. There's a good I would say 10 metrics you can go through. You can go through forward metrics or trailing metrics, which means forward means the next 12 months and the trailing means the past 12 months. So it'll go off the past revenue and profit. Forward means the future 12 months of profit and revenue. And you'll be able to look at the metrics from that point of view. And what them metrics will tell you An example for this one might be PayPal. If you look at something like a PayPal, for example, or even a Meta, for example, maybe even Google, you'll look at the metrics, and if those metrics are not just cheap for like the last 2 years, but you're actually seeing most of those metrics are cheap for the last 3, 4, 5, 6, 7, 8 in the history of being on the stock market, in the history of being a public company. If you're already automatically seeing a business and it's at the cheapest metrics it's been in the last kind of 10 years, that's a really positive sign that that stock is probably more than likely, a very good valuation here, and has had a bit of an overcorrection. Now, don't get me wrong, the metrics might be cheaper because these have deteriorated, which we'll talk about in a minute. However, more than likely, that's your first signal going, okay, it's the cheapest metrics it's been in the last 5 years in its history. This could already be a very, good opportunity to be staring at. Next thing is revenue. Now, revenue is key for growth companies. It's funny to see, like in the last 12 months, everyone was very focused on growth companies. Everyone's kind of gone, oh, not touching growth companies anymore. Everyone's talking about dividend stocks. But in this opportunity, growth stocks have been absolutely hammered, and there's mega opportunities in growth stocks. I think if we were to have a very good stock market, whenever that will be, if it is in 2023, if it has to be in 2024, when we do get that 12-month period where we actually have a green stock market, the S&P up 10%, the Nasdaq up 10%, a lot of growth stocks are going to be rebounding very much 2x, 3x, some maybe even a bit more than that. And the opportunities are hidden at the moment because the bulls of the growth stocks have disappeared. And the first thing is looking at revenue growth. The key thing is you got to have a business that has revenue growth. Revenue growth is one of the key drivers of how you have a successful business, especially on growth stocks. You need to see revenue growth, and revenue growth then translates to profit growth. And you got to be looking at, has that revenue growth improved in the last few months, few years, especially if the valuations got cheaper. Now, obviously there's a few stocks that profit, profit is key. Obviously with growth stocks, you're making sure that they're moving to a path to profitability. A growth stock has to have a path to profitability. If it doesn't have a path to profitability, there's only so long investors will stay with it, and then it starts burning through the cash, and then people get worried, and then they start having to dilute shareholders, or they have to go raise equity or put debt on that balance sheet. So there needs to be a path to profitability, or they need to be making profit in a few years time if they're a growth stock. Now, when you have a combination of revenue growth and profit growth, you want to be looking at a business, and this has so many of these opportunities are up at the moment, is that there'll be a few businesses, I can name DraftKings, Hims, Celsius, PayPal, Google, Meta. There's a lot of stocks at the moment that have seen the revenue and the profit or the path to profitability move in a really positive direction, and the business has moved in a really positive direction. However, in this time period, you'll see the stock getting cheaper, the share price going down, or the valuation going lower and lower. This is what you want to be looking at. You want to be capitalizing on the stocks that have had this, where the revenue and profit has gone up massively. The business is fundamentally in such a good place, and because we've had a stock market that's put a lot of stocks to the valuations they were at 2 years ago, or a very cheap valuation, those are the massive opportunities that you want to be looking at. Look at the stocks that have been fundamentally really performing very well and at cheap valuations. And a balance sheet, obviously it's key to have a very strong balance sheet, especially now, interest rates going up, a lot harder to kind of raise capital. A lot of businesses have been able to get away with, high share prices, dilutions, really cheap debt. A lot of businesses now really don't want to be taking a lot of debt on that balance sheet. So obviously, more than ever, you want to have it's the key thing to have a really strong balance sheet here. And the last point I want to make is the stock market is the only place where a great asset can lose 50% value. It's amazing. It's amazing. That's why you can make really good amounts of wealth in the stock market. There's not many places, apart from maybe a rare blip, in the housing market. But even then, the housing market to drop 50% is a phenomenon. Whereas in the stock market, an asset can lose 50% so easy within a couple of weeks, maybe even a day. I've seen a few stocks in this period of time, a few stocks that have lost 50% of their value in one day. And it's a crazy thing because the stock market is the only thing where it's really easy to sell. People panic. People see that share price going down 10, 20, 30%. They lose their head. They panic sell that asset. And it's the only place where a really amazing asset, PayPal, Meta, There's other stocks in it. I mean, if you've seen Google going down like nearly 30%, it's the only place where you'll see amazing assets lose 50% of the value within a matter of weeks. Now, obviously, it's been over a bit of a longer period of time in the last bear market that we've been in. Obviously, we've been in the bear market for coming up to at least a year now. So it's been a little bit of a longer period, but it's crazy because normally in any other walk of life, you will never see something that amazing. You know, imagine your favorite car is a Ford Mustang, and you're like, oh, I absolutely love that car. Imagine walking down the street and seeing that same Mustang the next day, and it's lost 50% of its value. You just would not see it. It's still the same Mustang, and it's the same for a lot of these businesses. A lot of these businesses have just been hit by overreactions, or maybe there's a little blip on what's happened with the business. Maybe they're having a little issue that will be resolved in 12 months time. There's a little bit of an impact because this is happening and this is happening, but it's pretty much the same business. It's absolutely fantastic, and whatever issue it's having, it's going to resolve it in a few months time. However, people have overreacted, which can happen in the stock market. The only place where it happens, and then it goes down 50%. That's what's going on at the moment. The same sort of businesses, maybe some of them are having blips, some of them aren't having blips, by the way. I can name a few stocks that aren't having any blips at all, but some stocks are having a little bit of blips, and investors panic. It's the only place it happens, and you get really amazing assets at 50% of the value. And when that happens, and this is why the stock market is, as long as you've got patience, you can buy amazing assets for half the value that will do absolutely amazing. And people all of a sudden, you look back on that and go, can you believe, when it's very different in the bear market. It's hard to do in the bear market, but especially when you get into a bull market, you look at them, these sort of days, and you go, can you believe people panic that much, and that stock, whatever it may be, Google or Meta or PayPal, it lost, people, that lost half its value. People actually, it went down 40%, and then there was another 10% of people that went, let's actually sell that stock. It's crazy. It's crazy. It's the only place where you'll see great assets lose so much value. And if you're a great stock picker that has time, patience, studies the business and the valuation and how the business is actually performing inside the business fundamentally, and you get amazing values. And it's one of the key things to be. And if you have that mindset right now, you have a stock picker's dream right now. And like I said, I think you'll be very, very much rewarded in not too much time, because like I said, I think we're set for a very good 2023. But right now, it might be a little bit of a slog. It's been a bit of a tough 12 months. It might be a tough couple more months, but I think the end's in sight. And if you've had the patience and you've been buying, I don't think it'll be too long before you get the rewards, because like I said, I think all this is kind of going on here. So I thought I'd make this video, talk about this, and things that you need to know and think about as a stock picker ready for 2023. And hopefully this will kind of give you some rewards in that period of time. So I hope you enjoyed it anyway, guys. Smash that like button, and I'll see you in a bit.